All right, hey, what's up, everyone? It is Monday, December 4th. Here are the U.S. futures markets. So, starting off today with the S&P 500. Let's go to it real quick. Here we go. So, there was a retracement trade earlier this morning, going from there to there. Let's put this on there. See, price hit the 50 right here, right back up to 38. So, easy trade right there. And then at the end of the day today, we see price closed above the median line right here. For this trade, what this is going to be expanding triangle. Here you have first point, second point, higher high third, lower low fourth right there. So when price closed above it, what that did was it set up, there's the target right up there, going down there. So if we get a pop up tomorrow in the market, we're looking at the target, from, let's see here, around 45.97 down to a sliding scale up there. So it could be going in tomorrow, 25 plus point day on the S&P 500, at least if that target goes up there and get hit. You can see from the daily extension levels that the low was hit for today, and then that was the support of the day. See right there, between the 1.146 and 1.414, right in there. That was the low of the day, and then bounced off right close to it. One thing I did for this weekend for the pitchfork trades is instead of having the 1.5 be the target, I moved it to 1.146. And I'll explain why on the Dow Jones here just in a little bit. Fits it a lot better. And so that's the trade we're looking at going into tomorrow for the SP 500, the long up there right there. If price continues to go down and hits either the bottom of the yellow line, you can see we have a lot of other retracement trades we have set up over here, but hits the bottom of the yellow line, that would signal that we're going to move the target from being up here down to closer to where the entry level was, right up here. One thing I'm looking at for it is taking it from points 2 and 3. Let's see here. Yeah, right there. So taking it from points 2 and 3, and either you get in at the 1.4 and 4 level or at the bottom of the line if price goes the other way, and I'll show you why. Was the SP 500? Let me look here. Or is it another one I was looking at? I think it's another one I was looking at. Yeah, it's another chart that we'll go over, which is a reason why I was looking at the 1.4 and 4 to get in as well. But anyways, going over here to the Russell 2000. So there was a trade today, right here. It's an expanded triangle trade. Here we have points 1, 2, low 3, high 4. And price closed below it right there. There was the entry right there. See, price came back down and just came down for a little profit before it hit the yellow line right down there. And originally, the high of the day where it had a lot of resistance was the 1.146 level right there from the daily highs. Bounced off of it. That was the resistance. But then at right when the market opened, 8:30, zoomed right back up to get a nice little profit for the Russell 2000. And the Russell 2000 was the only one in profit today, but that's typically how it goes, where the S&P 500 and Dow Jones typically go hand in hand. And the Russell 2000 will get to the same point as them, but kind of does its own thing to get there and doesn't really move in tandem with them as much as those two do. So then going into tomorrow for the Russell 2000, there was some other expanding triangle trades, but these things already got filled. You see like it right here, 1, 2, 3, 4. So we'll take points 2, 3, and 4. See, it closed above it. The very next candle went up there and hit the target right there. So not really a whole lot else to look for going into tomorrow for the Russell 2000. Now the Dow Jones, this is the reason why I'm looking at taking this to the 1.146 for the targets level. So this is expanding triangle trade right here. There's 0.1, 0.2, low 3, high 4. So when the price, let me take this off of there. When the price closed below it right there in that candle, there's the black line. That's the entry point for it. The target, the original target that I was having was the 1.5 level right here, the yellow line. But then after looking at it, I said, well, what if I make it a little bit closer and do the 1.146? Well, so it still doesn't matter for this thing where the price, when it originally closed down here, it never came and hit the 1.5 level or the 1.146 price went up the opposite way. But here's what happened over here. It hit the 1.146 the other way on here. Obviously, it didn't hit the 1.5 up here. So it hit right there, and then it came back down closer. Right there is a good exit point to get out of there. It's like low medium line, but of course, it also went down to the 1.146 the other way. But just be safe, I'd always get out closer to the median line with a little loss for this one, because like if I got in right there and then say I was like, all right, I'll just be safe and get out right there, it's a 30 tick loss. If I'd gotten in, say somewhere like right around here-ish, and then take it down there, there's an 80, it's say an 80 tick gain. So overall, a 50 tick gain for the Dow Jones is just fine right there. Just to ensure you get out, you get a profit in it rather than hoping it goes down the other way. Because I have seen it not always go down there, but have seen it pretty much every time come down at least closer to the midline area, where in midline, lower than the midline, or where you got into the trade originally for it. So it did for that, even though it did also as well go down and hit the other way. So from there, so if you're using the 1.5 trade, which I was looking at, I'll probably just take a good loss on this one, is you would have gotten in on your second contract right here. See the yellow line, that's where it went up there and hit. Or it would be at, if you take it points, let's see here, 1, 2, 3, the longest points 3 and 4, or at the 1.4 and 4 level right there, still close to that yellow line right there. It's funny how that always adds up. So either right there, you get in right there, and your exit would be, somewhere closer to the entry level. So probably somewhere like right in here would be your exit for it for a nice gain, because there would be 63 loss, and then if you got in, say somewhere like right here-ish, 146 gain right there. But look what's happened ever since then. Price took off that day, and then took off the next day, and then today it's finally having some consolidation today there in the market. So I'm gonna give it another day and see what's going to happen. Another day or two, see what's going to happen with it. But if it pops off again, goes north a lot more, I'm just going to get out, take a loss, be done with it, and say this is the one that we need to. It's going to be the 1.146, and that would have gotten us out a long time ago. So other than that, here for the Dow Jones, potential retracement trade. If let's change this to right here, price goes up, hits a 1.146, that would create a retracement trade right there down over here. But until it does that, there's nothing really going on. Here we have a 1, 2, low 3, high 4 trade right there for the shift pitchfork, put it on there, closed right there, and then came back down for a little bit of profit. Nothing that great. Let's see, 50 tick profit. But again, getting in at 7:45 p.m. on Sunday night, going into Monday morning, there's no way I'm taking that trade there and monitoring that. But anyways, just want to show you that was on there. Crude oil. Come on, crude oil. There we go. So here's another one right here. So looking at it, here it's an expanding triangle, 0.1, 0.2, 0.3, 0.4. So we put the shift pitchfork on it. There's the entry that I put on there, right? Get over here. Right there, entry. That was the original target. But as you can see, this is why I was also looking at entering in at the 1.44 level, which I think will be fine, especially if sometimes price doesn't go down and hit the opposite trend channel from the pitchfork down the other way. Now, as you can see, using the 1.4 and 4 from the daily extension levels between the 1.146 and 1.4 and 4, that was the support of the day for it. But it also happened to be as well. If we take points 3 and 4, which is the longer points from the 1, 2, 3, 4 move right there, there's the 1.4 and 4 level, and I can see price hit off of there, and that was definitely support. So once it does that, that's one thing that I mentioned earlier, is either you get in right there or you get in at the lower pitchfork channel for it, and then once it hits that, then your exit is closer to the to the entry point right there. So just be safe to come out a little bit, say something down like that. You would take, say if you got in right there, from there to there, you're looking at a 45 tick loss. But if you got in right here, up to right here, there's a 138 right there. So you're looking at about close to a 75 tick gain there overall in the crude oil. So that's how that works. If the price for the movement doesn't go up and hit that and it goes the opposite way, that's kind of like the safety net to get you some good profit in there. So if that trade is done, that trade's done for there. So then going into tomorrow, oh no, it's NASDAQ that we need to look at that. I wrote a note for myself. I mean, there was some movement up in here, but these are too hard to get into for these expanding triangle trades right here, there, right there. You can see it closed off right there, went up and hit it the very next candle, and then just kind of mellowed out here for the rest of the day. So we have had a stair stepping down here in crude oil. You see lower day, lower day, lower day. And pretty much all the days are hitting off of the, see there's the 1.146, that was the support of that day. And then today for the, it's hitting off the extension lows, and that's being the support of the day. So if we get a fourth day of that tomorrow, we can, if that trend's going to continue, we can look for the price to go down to tomorrow if it continues between 72.28 and about 71.64 would be the target area to look for, and then see what's going to happen after that. Going over to this messy spaghetti looking chart right here, over to NASDAQ. Let me explain some of this. I'll just take this off because we don't need that. That's a retracement trade setup right there. All right, which one do we want to look at first here? Let's see here. Okay, let me explain this one real quick. So this is a past one, but this is why I was looking at making this the what is it? Let's put it on there. Clean that up a little bit. The 1.44 level, or going the other way. So this is the triangle trade right here, where you have there's the high 0.1, low 0.2, lower high 0.3. Excuse me. Wait. Lower high 0.3 and the higher high 0.4 right there. See, it's a higher high compared to that, lower high compared to 0.1. So I put the blue line on there to signify between points 1 and 3. That's the triangle trade setup. And then all I do is put the inside pitchfork on it right there, and the levels we have, which I did change as well over the weekend. Instead of 1, went to 1.5, but kept the 5 the same right there. And so what we do, put it on points 2, 3, 4. When the price closes above take that off of there, closes above the purple line going up, because as you see there's 0.4 right there. So that means we're looking for the close above it, above the purple line, going away from it. And there you go, we had it right there. That's the entry point, but obviously it didn't go up there and hit the target, which is the green line up top right there. Price came on back down, hit the green line the other way, so you could go along there. Or what you do is you take the long points for it, the longest movement for it, which is going to be from 0.1 to 2 right here. Put that on, and there's the 1.414 level right there. And you can see that was kind of the bottom level for it. And also we have a retracement trade down here as well. But anyways, so either that one or that one right there, both of them if I want to do that. So then you get in right there, and then you take it up closer to the where the entry is way up here. But I probably would have taken it something like down right over here, or even maybe right over here-ish or something like that. So we'll just say we took it down. I don't want that. We'll just take it. We'll say we would take it down to there, which is kind of like the midline from where it broke. That's a good place, looks like, to get out at. And then you're looking at from that. Actually, we'll take it a little bit lower. Take it down and just say we would have gotten it right there. So that's, more than usually the loss I would take for it, but we'll just, for the sake of this example, 59-point loss for that contract. But then for this contract, if you had gotten in at the bottom of this channel right here, looking at close to 120, just nice round number. So 60 and let's say 60. 60 is what it is right there. So, still 60-point gain in NASDAQ if you'd gotten in right there. And then also for the 1.44, if you were playing it even safer or more aggressive, 152 right there. And you don't necessarily even have to take, but that's all I like to do is try to get at least a 2-to-1 win. So that way, if you're just in one contract here, you're still going to make good profits. And if you get in for 2 contracts down here, which I do sometimes, or now maybe get in right there and get in for another contract right down here, you're going to make some really nice profits. I mean, that's straight up profit, 153 right there. So that was the reason why. So when I started looking at having it being at the entry, not necessarily being at the bottom, the second entry being not necessarily at the bottom of the pitchfork trend channel down below, but also the 1.44. Sometimes it didn't go and hit, as we saw, I think from the SP 500. It didn't always go down and hit the bottom of the pitchfork channel, depending on what the slope is for the pitchfork. So that is the genesis of. I'll just write a good example. That is a good example. So that should clean up some of this chart right here, so we can talk about what's going on today. Yeah, here we go. Okay, I cleaned it up a lot. Let me clean up that. Put daily extension levels. That's easier to see. So from there's the move forward. This is another triangle trade right here. Using orange semaphores, 0.1, 0.2, 0.3, 0.4. I need this over here because that was another potential one, but that one never came up and got hit. Let me show you real quick. That was 0.2, 0.3, and 0.4. You can see never came up and closed above it right there. So anyways, so let me change this actually to that. There we go. So 2, 3, 4. Price came, closed above it on that one right there. So that's the original target we're looking for right up here, right up there, the green channel. And then of course it did not go down there, go up there, hit it, but look what's happened again. Price has come back down, not only hit the, I'm sorry, it just hit the bottom of the 1.146, which is not where you get long, but you would have gotten long right here. See right here, there's the 1.414 level. We can even change the color here. There you go, a little bit easier to see. You would have gotten in right here at the 1.414 level, which again was pretty much the bottom of it because it doesn't look like price is going to go all the way down here and hit the bottom of the 5 line the other way for it. So you get in right there, and the exit is, there's your entry, so it'll be up closer somewhere to the entry level. So we'll just take it down. See, it looks like there's a lot of congestion right up there. So something about right up there. So then your first contract, if you had gotten in right there, you're looking at around 62.25 loss. You get into 1.414 level. Price goes up a little more, 180. So it's about around close to about 120 point gain there, assuming price continues going into tomorrow to pop up and hit that right up there for the NASDAQ trade. Then, if you look, and then you see red. But basically for today as well, if you would put on the daily extension level for it, look like it's gonna be a blowout day from the extension levels right down here, right here. But soon turned back around, went back up in it, found support in it for right there. So ended up not being a blowout day here for NASDAQ. So going into tomorrow, looking for a little bit more of a pop up somewhere, right in this area, and then see what happens from there. And then if this turns red over here, because what we're looking at right here is using these semaphores, 1, 2, our high 3, lower low 4. This is one I was looking at last week, but I had this right up here where I said it needs to turn red, but it did not turn red, obviously. And came back down, made a lower low, so made a lower low that nullified that, obviously, and so we're waiting for this one to turn red, and this would create a 1, 2, 3, 4, an expanding triangle trade here. Let me show you what it looks like. It looked like that. We'll wait for that to close above it, and to see if we hadn't waited for this to turn red, then what would have happened if I put it right there? It gave a false long right here, and then now it's just crapped out below it, so it wasn't a real trade. That's why you have to wait for the semaphores to turn the correct color for it. So let's look at Bitcoin. Bitcoin's popping off over here. Oh, we actually had a gap up today. Here was what one thing. I think I need to change this one. Yeah. So if I change that to the 1.146, and this will trade right here, where this was a long right here, went up there and hit that for that one to be done rather than 1.5. So that one's said and done right there for Bitcoin. So yeah, Bitcoin's been popping off. It's got definitely some momentum behind it. You know, we even had a gap up here today, but be cautious about this. I do expect this thing to come back down here and get filled, because typically, oh, that's actually a bigger gap than I thought. 39. How big is that gap? 930. $930 in it. So typically when you get gaps up like that, they come back and get filled. Now, it may not happen for a while. I mean, if this thing is just blowing and going, this thing could go up higher before it eventually retraces and comes back and then fills the gaps. But that's just one thing to be aware of right there. And obviously this was just a straight blowout day right here in Bitcoin. If you look at daily extension levels, look at that. It opened up above the extension high of the day and didn't even, it came back and kind of kissed it and then just took off from there. So straight blowout day today there in Bitcoin. So looking at this, let me change that. There you go. We still have that long setup that I talked about last week for Bitcoin. I believe it's using the weekly semaphores. Yeah, it's expanding triangle trade. You can see right here, 1, 2, 3, 4. Let's see if this thing, yeah, it's on the right one right there. 1, 2, high, 3, low, 4. So we put the pitchfork on it. Yep. All right, cool. So the target we're looking for from this setup right here is right up here. So it's at 42,280. It's a sliding scale down. So, you know, right here is about $55,000, you know, going down depending on how much time it takes, but definitely north of 50,000 for us. So still from this setup, you know, if we still get that push higher, still, you know, about $8,000 more, $7,000 to $8,000 more in this little run here. But the big run that I have that I'm predicting is my Elliott wave move I have right here, which I need to do another video on how I do the Elliott wave. I use it with Fibonacci levels to identify it easier. But anyways, if you take it from down here, 0.0 up here to 0, 1, 2, 3, yeah, the 3 up here. The target is 78,815. You can see the wave right here, 0.0, 0.1, 0.2, 0.3. Here's 0.4, and then 0.5 is the target I'm looking for right there. Of course, it can go higher than that, but that's the target that I look for the 5-wave move to be complete. If it doesn't hit that or doesn't come extremely close to it, then in the way I do it, I say it's not a valid setup for it. The only way right now this would be an invalidated trade is the price comes down close to below 14,170, which came close but did not. It came down to, I'm going to go down to 14,925. So yeah, it came very close to it. But because what that would do, that would invalidate one of the Elliott wave rules, where wave 4 cannot go into wave 1 down here. We can't break that. Can't go below wave 0.1 right there. So yeah, Bitcoin's popping off, and it definitely has from this one right here, another $78,000 more. And from the Elliott wave, if it is going to go up there and hit that, you know, from there it still has another $30,000+ in it. And of course, like I said, it can go higher than it, but that's just the target I'm looking for it for that. So that's it for today. Thanks everyone. Bye.